What countries have implemented quantitative easing? In today's economic climate, many are asking, what countries have implemented quantitative easing? This topic has gained traction as central banks continue to navigate challenges. With inflation concerns and economic recovery on everyone's minds, understanding these policies is more important than ever. Quantitative easing is a monetary policy where central banks purchase financial assets to inject liquidity into the economy. It aims to lower interest rates and stimulate economic activity. Several countries have adopted this strategy, especially after financial crises. The United States is one of the most notable examples. The Federal Reserve initiated quantitative easing programs following the global financial crisis in 2000. They bought large amounts of government bonds and mortgage-backed securities to stimulate growth. Japan has also been a significant user of quantitative easing. The Bank of Japan has been implementing this policy since 2013. They introduced a program called Quantitative and Qualitative Easing, which involved buying government and corporate bonds to combat deflation. In 2016, Japan expanded its measures by introducing negative interest rates and yield curve control. Recently, in 2024, the Bank of Japan began raising interest rates, indicating a shift away from ultra-loose monetary policy. The European Central Bank launched its own quantitative easing programs in 2015. They began purchasing government bonds and other securities across member countries to support economic recovery and address low inflation. The United Kingdom's Bank of England also implemented quantitative easing after the 2008 crisis. They expanded their efforts during the COVID-19 pandemic by purchasing government bonds to stimulate demand. Other nations, including Canada, Australia, Sweden, and Switzerland, have utilized similar asset purchase programs. Emerging economies like Argentina have also made monetary policy adjustments, although specific quantitative easing programs are less documented. Overall, quantitative easing has been a key tool for major central banks in advanced economies. It has helped stabilize economies post-crisis and support financial markets. While emerging economies often relying on different monetary and fiscal tools, some have adopted asset purchase programs in response to economic challenges. Understanding these policies can provide clarity during uncertain economic times.